I want to bring in Neil Sipes. He's a financials analyst for Bloomberg Intelligence, or the Bloomberg Intelligence financials analyst. He joins us here in the Bloomberg Interactive Brokers studio. Robinhood, it's an amazing story of what the company's been able to do over the last few years and go from being this upstart to competing with the biggest names that are out there. Expectations going into this were relatively high, even though the shares have been under pressure of late, but down 8% in the after hours. What's your immediate reaction?
Yeah, so I think the immediate reaction is that we know that Robinhood is sort of building a franchise in the shadow of Schwab, we'll call it, right? But ultimately today, Robinhood, as we know it, earns about 60% of revenue from transaction-based sources. So the things you were listing off, crypto trading, options trading, equities trading, all of that is incredibly important and part of the lifeblood of the fundamentals for Robinhood, which has been really strong in 2025. In the fourth quarter, activity was pretty strong. It looks like we missed estimates on crypto, which of course is a very big story to start 2026 in terms of the sort of dive that we've seen in prices in that space. And so ultimately, I think the question is, what happens to retail sentiment more broadly as we move forward? We've obviously had pretty steep pockets of unevenness in the markets tied to software, tied to AI scares, et cetera. And when crypto's 20-25% of your revenue, and that's very well off the highs as well, the question is how engaged do the retail traders stay, where 75% of customers are below the age of 40 on Robinhood. The average account balance is $12,000 in those accounts, right? So where do you go from here when some of the things that you were most active in trading in are not going up and to the right?
Well, maybe that's prediction markets.
And that's something that I'm sure they'll point to on the call today. And that's a business that frankly didn't exist 12 to 18 months ago, and now it's somewhere between 5 and 10% of run rate revenue for Robinhood. So they've created that sort of out of thin air. What we do know that when you say prediction markets, 90% of that is actually sports betting.
Yes.
So that's certainly a question that we have broadly across the industry of should that be on the application where you're supposed to be investing long term. But ultimately, what Robinhood has really done, and the mantra is giving clients what they want, access to it in a very easy, cheap way to use, and that's what they're doing. So for now, it's there, and that's going to be a tailwind to the extent that it's allowed by regulators to stay there. So we'll have to see how that develops.
Yeah, it's interesting. I was just thinking about, all right, so Robinhood is about a $77 billion market cap company. Schwab is about $181 billion. We've spent a lot of time with the Schwab folks and at some of their big financial events, and they play a lot with the registered investment advisors and wealth management.
And so Robinhood doesn't have that business.
Well, that's why I'm thinking, are they apples to apples? Is it that, can Robinhood really become an entity that really gives Schwab a run for their money, or those that are also competitors of Schwab a run for their money, or is it not the same thing?
I think today you see two very different business models. I think the long-term goal of Robinhood, and I think the businesses that they've been pushing in, which is, by the way, a small unit in RIA custody as well, is sort of going to look like that business. The problem is, maybe not the problem, but the client profile on Robinhood just is very different. We talked about $12,000 average account balances. That certainly could be different in spot rates in February than it was at the end of the year as well, mind you. And you look at Schwab, where the average account's north of 200,000, right? So it's a different client set. They transact differently, they invest, they trade differently. So ultimately, the monetization of those customers is different. In 20, 30 years, when the average customer on Robinhood looks more like Schwab's today, perhaps the revenue makeup will resemble more like Schwab, something that's perhaps a little bit more durable, less cyclical, but still different today.
One question before we move on, though. I mean, Neil, do clients on Robinhood, as they get a little bit older and make more money, are they staying on Robinhood, or are they going elsewhere?
I think that's the question, and we're still sort of in that feel-out period where there's always been concern of graduation risk, we call it, for Robinhood, where eventually you'll move on to the more sophisticated platforms like a Schwab that are perhaps less flashy on the mobile app, and you can do less things all in one place, but are more geared towards those longer-term investors. And by the way, give you access to those wealth platforms, which Robinhood is looking to do, but those customers just aren't really demanding it yet.
Or maybe AI just replaces everybody.
A perfect segue. We're speaking with Neil Sipes, financials analyst for Bloomberg Intelligence. An AI tool aimed at creating tax strategies sparked a sell-off in wealth management stocks today. Speaking of Charles Schwab, down 7.4%, Raymond James down 9%, LPL Financial down 8.3%, Stifel fell 3.8%. Is this overdone?
I think early days, we're still digesting what it all means, but I think you could argue that some of the fears are perhaps a little more draconian than they should be. AI isn't new in wealth management. You've had big players like Schwab, Morgan Stanley talking about, AI initiatives that they've been rolling out over the past handful of years, which most of which are aiming to boost advisor productivity. So we were just talking about Schwab, talking about Robinhood. That's mostly self-directed, right? You're pulling out your phone, you're making the trades that you want to do. When we think about Schwab and Raymond James, LPL, Morgan Stanley, these are much more that human touch advice. You're going in to meet with the advisor and providing more of a holistic and comprehensive financial plan for your life. Those are, relationship-driven businesses that, yes, can be shifted by AI or actually enhanced, we think, by AI, rather than disrupted and, completely, disintermediated by removing the human and completely shifting the wealth management model. We think that's less of the story here and more about incremental positives from AI, albeit over the long run, you can see some of those efficiencies competed away in the way of fee compression, right? So if things are easier and cheaper to sort of provide that financial advice, like some of that tax planning software that came out today, frankly, that helps financial advisors do their job, which really just kind of improves that productivity.
Or have more face-to-face time with their clients, or even get more clients.
Right.
So time will tell.
So
you rock. Thank you so much. Great stuff. Neil Sipes, he's Bloomberg Intelligence financials analyst, joining us right here in our Bloomberg Interactive Broker studio.